It's Paul from CCA. Today we're going to talk about our loan agreements and in particularly our vendor finance loan agreement. Now, a vendor finance loan agreement can be used a couple of different ways. The main key to a vendor finance loan agreement is that the vendor actually finances the purchase of a piece of equipment or a piece of stock to their client whilst using that piece of equipment or that stock as collateral. So you can use it a couple of ways. Number one, it can be for that odd one or two bits of stock that are still sitting in the warehouse that haven't shifted, that you know your clients would like to purchase, but maybe they don't have the cash flow right now. Or alternatively, some of our clients use it as the main way of doing business. So it can either be a short-term or a one or two-off application for a piece of equipment or end-of-line product, something like that. Or it can be the way to operate a business. Now, we do have one client that uses vendor finance agreements to finance vending machines, of all things, to their clients. So the clients actually purchase the vending machines over a period of a couple of years. Our client still gets to keep use the vending machines as collateral for those agreements, so that if they default in payment, then they can easily take the vending machines back. But most important thing is these vendor finance agreements being registered on the PPSR. Now, we do have a lot of information on the PPSR and how it works. I'll put links in the below description if you're keen to find out all about that piece of legislation. But essentially, by registering on the PPSR, the vendor or the person providing the loan is getting the absolute security of still maintaining ownership of the piece of the equipment, which is probably the most important aspect of the vendor finance agreement. Okay, when it comes to setting up the loan on your behalf, the process is really straightforward, but as you can appreciate, there are a number of variables. The first one would be the entities involved. You know, whether they're businesses, whether they're companies, whether they're trusts, we need to ensure we've got the right parties. The second one would be interest rate, whether you're going to charge interest, what that interest rate might be. You might elect not to charge any interest at all, or you might elect just to charge a flat fee. It's up to you. Another variable would be the costs, including the costs into the loan. So rather than having to pay, getting the borrower to pay an upfront fee, you might just decide to incorporate the costs into the loan agreement and just gets paid off over the period of the loan. Another one is whether you want a balloon payment at the end. You know, sometimes you might decide to structure the loan repayment so that there's less of a monthly amount and maybe a balloon payment of 10% at the end of the period. It is totally up to you. We can tailor it to whatever your requirements are. Direct debits. What we find the best way in order to ensure the loan moves forward throughout the loan process without any defaults or issues is to make sure the payments are direct debited out of the borrower's account on a weekly, fortnightly, monthly basis, whatever you've decided those loan repayments to be. Also, the fact that the loan payments can be signed with electronic signatures, which means you can get the loan to your smartphone or to your tablet. Just sign the agreement with your finger. Job done. So it makes the whole process of implementing the loan very easy. And then now, once you've got your loan established, the reason you'd purchase a loan agreement through us, through CCA, rather than anywhere else, excluding the fact that through us you're able to direct debit your loan repayments from the borrower's account, and the fact that you're able to register a security interest over the loan, so you've got the same protection as the banks. What we also do is we provide you with a loan management dashboard. Now, this is your personal dashboard, which only you have access to, which you can go into at any time, 24/7. You can have a look at the loan repayments because they're all listed in your personal dashboard. You can see which ones are paid and which ones are not. You'll automatically get default notices if the payment doesn't go through. There's a whole range of different things, but some of the main points is you can adjust your loan. You can adjust the loan amount, you can adjust the loan period, you can top up the loan agreement. So let's say, for argument's sake, you decide that you're going to put another $50,000 into a particular loan agreement for whatever reason, then what you would do is you would just renegotiate the loan. You might decide to extend the period, which you can do through your portal, and a new loan would just automatically start. Your registration or your security would just remain the same. You can even defer payments. So if your borrower comes to you and says, hey, listen, we're having trouble this month, can we defer this month's payment and put it on the end? You can do that all automatically through your dashboard. You can even forgive or cancel the loan. It's totally up to you. So having your personal loan management portal gives you absolute control over your loan, which you just can't get anywhere else. Now, once you've identified that, yes, a vendor finance agreement is right for your business, then it just simply is a matter of your investment. What a lot of our clients do is they'll include the cost of setting up the vendor finance agreement and add that on top of the item being financed itself. So it might change the amount, but as it's spread out over 2, 3, 4 years, whatever it may be, the cost is very minimal. But the upfront fee is about $325 a month for 4 months. So we get the vendor finance agreement set up and everything running usually by the time the second payment's due. So there's no real out-of-pocket expenses. And look, that's pretty much all there is to it. It's not that complicated. It is just a loan agreement, and most people are pretty familiar with loan agreements. They would have done that a number of times in the past. But I understand you probably do have a couple of questions. So what I'm going to ask you to do is to hit that Contact Us button in the description below. Drop us a line, fill in your details. We'll give you a call. We'll discuss the particular loan and make sure it's suitable for your particular requirements, for your individual needs. Absolutely no obligation. The one thing I am going to ask you to do, and that is to do us a huge favour by sharing this video across your various social media platforms. A lot of businesses aren't aware that these loans are available, let alone the fact that there can be such thing as an automated direct debit system attached to the loans, as well as the security, because that's a really positive thing with these loans. So please do us a favour, share this across your various social media platforms. But that's about all from me. If you've got any questions, as I said earlier, just hit the Contact Us button. But listen, have a great day. Stay safe. Thanks for watching. Ciao.